Did you know there was a mortgage protection presentation available to you agents out there to better help serve your clients with consistency and as an agent leave no stones unturned? By the end of this video, you'll learn how to properly run a mortgage protection appointment as an agent. My name's David Hadley. I'm with Bulletproof Legacy Financial, owner and founder of the company, and I've been privileged to be in the financial services industry for 5 years now. I've collectively helped protect over 1,000 mortgages with this same presentation, and I've trained hundreds of agents on how to use it, helping them better serve their clients all across America. So let's dive into this here today. So some of the first things we're actually going to do is you really need to state like who you are, your role and purpose. People don't want surprises in this appointment, you guys. They want to know what they're walking into. So let them know who you are. Hey, I'm David Hadley. I'm actually a state licensed broker. I represent 30 of the top rated carriers across the country here. Just to let you guys know that every one of these companies is tailored to families and their unique positions. Not any one of these is actually the same. Some of these companies, they might be better suited for people with high blood pressure, or some of them might be a little better for diabetics, or someone who had a heart attack, stroke, or cancer. So it's not any one recommendation for a family. We have to consider all these things into place. My expertise for you guys is to actually guide you through this today, to really navigate through the insurance carriers, to help narrow down the company that is going to give you the very best rates that you medically, financially qualify for. And then my purpose is really to help you just apply for that coverage and work with the underwriters, make sure that we can actually get you that policy. And don't worry, if it's not approved, we'll go to the next company up and make sure that we get you the strongest rates that you medically and financially qualify for. Does that make sense? Perfect. And then you're moving on. Tell them a little bit about what it is that we actually do. So on the life insurance side of things, we help with term, universal, final expense, mortgage protection, which is what we're talking about today, even accidental death. On the healthcare side of things, we do disability, dental, there's critical illness policies, there's Medicare supplement, Medicare if you're one of those agents as well. We also work on the wealth management side of things and asset protection. There are debt-free life policies. We work with annuities and IULs, and there's even mortgage acceleration, learning how to pay that mortgage off a little bit early. Mr. and Mrs. Smith, do any of these services actually stand out to you? And then if they do, tell that client, hey, remind me at the end. Don't let me forget to talk to you about that accidental coverage later, or don't let me forget to talk to you about that critical illness policy later, okay? It's imperative that you remind them to bring this up to you at the end so you don't look like a corny salesperson just trying to upsell somebody on something. They saw and heard one of the services that were important. They got to remind you at the end, okay? So make sure the client reminds you as an agent to bring this up at the end of the presentation. There's a few things that you have to discuss to properly run this mortgage appointment. So first and foremost is the mortgage amount. How much do they owe on that home? What is the full payoff right now? The next thing that you're going to want to talk about is the home value. You know, maybe that home's worth $500,000 and they only owe $300,000 on it, meaning they got like $200,000 of equity. Compliment them on their equity, you guys. Clients love to hear that. It validates that they made a good decision on that house. Next thing is what is the mortgage term on there? How long do they have this loan for? Is it 30 years, 20, 15 years? And whichever of those it is, how long have they had it for? So you can figure out how many more years do they have until that loan is paid off. Do they plan on refinancing? This is another good thing to ask. Monthly payment is a very important one. So including any escrow and taxes, what is the amount that you're actually paying on that loan every single month? Get the exact dollar amount, you guys. $1,567, $2,678, whatever that amount is, get that dollar amount. Ask them if they're paying anything extra on there. Are they making any additional principal payments? A lot of times, you guys, there's more effective ways to pay off that loan much sooner by reallocating that to some other strategies that we'll talk about at another time. But find out if they're paying an extra $100, $200, $500 a month on that loan. Next portion, we got to go through the health side of things. So make sure we gather all those prescriptions. Talk to them about have they had any history of heart attack, stroke, cancer, diabetes, get their height and weight. Have they had any major surgeries? Any heart problems, COPD, for major or minor things. So any medications they've been prescribed in the last 10 years, even if they had some painkillers for a tooth being pulled a couple years ago. This is all stuff that can show up on the MIB report, Medical Information Bureau. So it is important that you get all the medical questions answered and get any medications to accurately apply for some coverage. Next, we're going to talk about the financial side of things, their employment. If it's one person in the house, then there's only one income to gather. If there's two people in the house, get the net after taxes. It doesn't matter what someone grosses, you guys. It really matters what they actually take home. So Mr. and Mrs. Smith, ballpark after taxes, what do you guys actually bring home on a monthly basis? This is a very important question to ask. And then get the amount per person. $5,000 for Mr. Smith, $4,000 for Mrs. Smith, $9,000 together. This is important to understand. We'll understand a little more why we're asking that question here in a little bit. It could be a reason maybe why one person needs a little bit more coverage than the other. It's not always across the board even recommendation for each person, as incomes may vary, and one person's situation will look different than the other if that person were to die without some coverage in place. Lastly, on the financial side of things, ask them if they have any life insurance in place. Do they already have a term policy? Do they have a whole life policy or an IUL or a universal life of any sort? If there's any cash value in there, ask them how much cash value. Ballpark if they don't have those pennies on the dollar. And it's very important that you ask them, what was that policy for? See, a lot of people, they decide they don't need mortgage protection because they already have a life insurance policy. But maybe that policy was to pay off credit card debt after they passed away. Or maybe it was to pay off another loan that they owed money on, or maybe that was just to leave money behind for the spouse or for retirement afterwards. That money wasn't meant for the house. So it's really important that you label what that policy was actually for. Next, we're going to ask that client and really tell them, hey, before we talk about any options, like we really don't want to recommend any less than you need or more than you need as far as protection. So I'm going to ask you a few basic questions here to really help determine how much coverage we actually need in the first place. Does that make sense? They'll say yes. This is giving you permission as an agent to ask all those nosy questions. I mean, not that we just want to get into people's business. It's very important to understand if someone actually needs this or not. You don't want to over or under insure them. This also gets rid of the objection of asking these kind of questions by getting that permission first and telling them why you're going to ask them these questions. That part is imperative. Next is understanding their concerns. So letting these families know that, hey, did you know that 80 to 90% of families are in jeopardy of losing their home if one of the breadwinners passes? This is a rude awakening for many people, and it's a sad reality for most people in America, because if they lost one of the incomes in their house, that house is risk of going into foreclosure or them having to sell it. So number one question is on understanding their concerns is, what is your main concern of putting some protection in place for your family and potentially getting a policy here today? And listen very carefully to them. Let them talk to you. This is going to tell them about their why. And if they give you a very vague answer, ask them open-ended questions. Can you elaborate on that? Can you expand upon that? Can you help me better understand what difficult looks like for you? Or can you paint a picture of a little more in detail why this is important? Next is what if your spouse were to pass away? What would that situation look like for you from a financial standpoint? And ask both spouses this question individually if there's two people on there. And lastly, ask both people, hey, would you actually want to stay in the home that you're currently in, or would you want to move? If you want to stay in the home, can you afford to? If you want to move, where would you go? Would you rent? Would you move in with family? Would you sell that house, get the equity, and downsize? Help me understand what that looks like for each of you guys. It's really important to figure out what each person's plan would be. Maybe he would stay in the house. Maybe the wife doesn't want to sit around in the house that she lost her husband in and have those bad memories and wants to get out of there. each person has a different idea in their mind what they would do if the other person were to pass away. So this is a very important thing to explain to them. Next is the 3 options of what mortgage protection is. There's 3 options really. So number 1 is a full payoff. It is the most expensive option. It's generally a full payoff of their house. So the beneficiary, if they die, they could take that money to Vegas and bet it on red, or they could use it to pay off the house, or use a part of that money, refinance, and maybe have some extra money to live on. But when it comes to presenting options on here, we're going to show them a full payoff, which is the most comprehensive and expensive option. Secondly is a partial payoff, maybe like the halfway amount, the 3/4 amount, or somewhere in the mid-range of the payoff of their house on there. Lastly, the most popular option is what's known as equity protection option. It's simply like 6, 12, 18, maybe 24 months of mortgage payments. Again, the bank only cares about getting next month's mortgage payment on there. They don't care about the house getting paid off. As a matter of fact, the bank would prefer that you actually just continue to make the payments, because where they get their money is on the interest of those mortgage payments every month. Explain to them that this is just going to protect the equity, because if the bank forecloses on the home, whose equity is it now? This is imperative to ask you guys, because if they got $100,000, $200,000 in there, but the home gets foreclosed on and the bank goes to short sell the house, like, you're not going to get all that equity out of there. And you don't want your client to be subject to some low ball investor coming along offering them $50,000, $100,000, $200,000 less than the house is actually worth, and robbing them for the equity that they worked so hard for. And even having that 6, 12, 18, 24 months of mortgage payments buys that family the time that they need to pack up, put the house on the market, get the full sale value of the house, and protect that equity that they worked so hard for. It's the most popular option for seniors and people that are generally 65 and up, and or just have health issues. The next is really selecting their plan and getting down to the portion of how we're going to pick their plan out. So it's really important that we find them the coverage that's going to get them the protection that they need. And secondly, it's going to fit within their budget. If these two things don't line up, it's not a good plan for them. So it's really important that you help that family understand those two things, that today we're going to apply for something that fits within your needs as well as your budget. Next is after going through all the health stuff with the client, figuring out the company that we're actually going to use for them that's going to provide them the very best rates that they medically and financially qualify for, we're going to ask those families, we're going to put together 3 options, whether it's a full payoff, half payoff, and 12 months of mortgage payments. Or you're going to posture those equity protection options as 24 months, 18 months, 12 months. And then ask your client which of these options is going to get your family the coverage that it needs, but also is going to fit within your guys' budget. Be quiet. Let the family think about this. Let them talk. Next person to talk loses. You learn this in a car dealership. You're not here to push those options down their throat and force them to get something that they don't want. You need to let them pick which one of those is best for them. And it's also important to tell them that, hey, if any of these 3 don't align with your guys' needs and budget, please be transparent with me so we can move down to the next set of options on there. Now you're going to pull up the application. You're going to go through that process. Make sure that you can actually get that family approved on there. You let them know they do have 30 days to make any changes. They can increase or decrease that policy or leave it alone. And if anything changes, to give you a call. A couple more questions at the end of this. Now that you've gone through the presentation, you landed them on an option, you've gone through the application, there's a couple questions that you're going to ask these people, and you let them know, hey, Mr. and Mrs. Smith, you got insurance on your cell phone, you got insurance for your homeowner's insurance, you even got some life insurance in place now. Is your money insured? Is your retirement account insured? What do you mean by that? Are you protected from market loss or decline or fees? If not, I'm going to book an appointment with you with our advanced market specialist, David Hadley, and he's going to talk to you a little more about that. Or if you're running your own advanced markets appointments, insert your name in there. The next thing is do you have a guaranteed income stream for life planned out when you're ready to retire? Do you have a way to make sure that you have a pension check coming in every single month the rest of your life on your own assets? Most of the time, people don't. They haven't talked to their advisor about this, or if they don't have an advisor, it's definitely a no in most cases on that question. You let them know, hey, next time I talk to you, Bob and Mary, the last thing I want to hear is that you guys lost 30, 40, 50% of your money because of a market crash, and we could have totally avoided this. So what I'm going to do here is, based on the information I gathered today, I'm actually going to send it over to my advanced market specialist or go do a little research for you myself. Would Thursday or Friday work better for this follow-up appointment so I can give you some education on how this works? Land your appointment. You want to do a tie down at the end of your appointment, you guys. This is a very important part of the process because your persistency and your retention on your business as an agent is very important. So you let them know that, hey, all future communication will be coming from me or one of the underwriters directly from the company. If anybody else is going to give you a call or tries to pitch you or anything, you could just give them my phone number and my information. And otherwise, you just submit another form and it's going to come across my desk anyways. So you could just save yourself and the rest of the people the time and just give me a call directly, okay? This is a tie down. It's very important. And you let them know while the carriers are thinking about it and doing the underwriting on there. If for whatever reason we don't get approved today, I do work with 30 of the top rated carriers on there. We will pull up the next best option and make sure we get you a plan for your family. Sound good? They'll say yes. Okay. Perfect. Move on. You guys, this is how to run a mortgage protection appointment properly, how to leave no stone unturned, or as a client, really determine if you need this mortgage protection in the first place. I appreciate you guys listening in and giving me the opportunity to share this education with you guys. Have a blessed day.